Well, welcome, David. It's a great opportunity that you're here in Toronto. We can have a chat like we've had over the last 15 years, time and again. Just for people that don't know, that David's known as the worldwide silver expert. He's written a book called The Silver Manifesto, and he also has a newsletter called the Morgan Report. And what, it's got about 11,000 subscribers?
Not that many, but no, I've got two lists. My paid list, which I'll keep the number private, but the free list, which is a lot of people that I give useful information to, is about 35,000.
And David, of course, has been a speaker at many events and across North America and Europe, and is like I say, one of the leading experts, particularly in silver, but in precious metals and mining stocks as well. So I guess what's on everybody's mind is, we've had a severe bear market kind of starting from 2011, but most people think that the bottom was put in last year, and silver is off to a roaring start in this year. What do you think is the sort of the main driver this year that has caused this kind of spurt, and maybe a very long-term spurt?
I think the smart money has moved out. The most negatively correlated asset to the stock market is gold, as you well know and proved in your work.
Right.
And so the money that was in the equity market, that's been this bubble that's been ever inflating for the last several years, we're in a distribution pattern in the stock market, which means that the smart money is putting their stock into the hands of weaker individuals, the public generally, or maybe pension funds or insurance companies or whatever. And they're cycling that money into the most important asset class, especially in these turbulent times, and that's gold and secondarily silver. Mm-hmm. What's interesting is there was an article out 2 days ago that the amount of gold and the open interest on the COMEX is now double what it is a year ago.
Right.
Further to that, the last couple of what I carefully consider, to be orchestrated sell-offs in gold really haven't worked.
Mm-hmm. That's right.
In the access market, the aftermarket, as I refer to it, where the trading is very thin and a large volume is easily used to orchestrate a selling frenzy, has been attempted in a couple of times. In both cases, basically it was a ho-hum to gold. So this is a trading pattern that is very, very different than what we have witnessed for quite some time.
Right. And also, I guess on the COMEX, we're getting into, absurd levels of leverage in terms of, what is it? I think on the COMEX it's 44 ounces of claims per ounce of silver in terms of eligible silver, and gold it's multiple times that.
Yeah, there's, as you well know, Nick, there's a great deal more what I call the paper paradigm metals than there is physical reality, and it's been that way for a very long time. And the reason, I think, and I'm speaking on the exchange's perspective without actually determining what they think, but since only about 1% are ever delivered upon, their attitude is, well, we can have a 100-to-1 ratio because, over the greater period of time, that's all that's ever required.
Right.
But that's in a perfect world where everything's humming along just fine. In an upset financial system where people want their claims to be cashed in, so to speak, and they want those contracts settled in the real metal, that falls apart instantly.
Well, and this is where you've got the kind of totally distorted levels where you've got 250 trillion in financial assets, 30 trillion in gold, and less than 50 billion in silver. So any kind of minuscule moves out of those financial assets into either gold or silver just skyrockets things. And then now when you look at 13 trillion in government negative interest bonds, like when is it that those people start getting it that you're better off holding gold than bonds that lose you money?
Yeah. It's very hard to tell people when it's a top.
Yeah.
But I've had many calls over the last years, but more recently, and my father is in the bond market. He's had a 30-year run. He's just doing great, but I can't get it out of him. Mm-hmm. And it's very, very sad, because I think the bond market has probably peaked. I think the Japanese market is foretelling the future of the bond market, and a little bit of interest rate change is the bond price a great deal, as you know. And it looks like the sell-off, not the sell-off, I should restate that, the peak in the bond prices has already taken place in Japan, and probably taken place in the U.S. Treasuries across the board as well. I think short, even to long-term yields. So once the debt markets readjust, and I think it'll be a massive readjustment, we're going to see a run to tangible wealth, or wealth you can trust, not the promise of a government bond backed by basically hot air.
Yeah, that's guaranteed to lose your money.
Yeah.
It's amazing. And this is the thing, when we go into the relationships, people haven't yet really understood gold, let alone silver and platinum. And in both cases, we've got some strange anomalies, like silver. Although the silver-gold ratio has come off its highs, still very high compared to the long-term average and compared to the lows. So, there's a huge adjustment that needs to take place to balance silver out relative to gold.
I believe so. I mean, already in this bull market, we've seen a ratio drop to 35 to 1.
Right.
And now we're back to 71. So
right.
if silver just performs as well as it did so far, you're going to do twice as well investing in silver as you will gold. I still recommend everybody, really have both silver, gold, and probably platinum. But I think it's going to do better than that, because when this financial panic gets going full stream, or what I refer to as the run to gold, what will take place is there'll be a lot of people that can't afford gold, be priced beyond their means, so they'll move into the silver market. And this will take silver to a gold-silver ratio, probably at the monetary or a classic ratio of 15 to 1. And it could push it beyond that. This is what we saw in the 1980 move. It was temporary, it was a spike, but nonetheless it took place, and we got back to the historic or classic ratio of 16 to 1. This time we've got a worldwide market, and the trillions you outlined, and I have to add on to what we were talking about a moment ago about the bond market. Franz Pick referred to bonds as certificates of guaranteed confiscation.
That's right.
But if you tell somebody that's been in the bond market for 10, 20, or 30 years, they look at you cross-eyed, because, what works for 30 years works forever. But that's not true. Yeah, exactly. Nothing grows to the sky. I learned that the first time watching gold go to 850 on the spot market, 875 in the near futures, and it came off. It didn't go to infinity.
Right. Well, it's going to be interesting to watch in the move to silver. I guess one of the things that, again, isn't in the mainstream media, but if you look at coin sales, particularly at the U.S. Mint, we're like at nearly 4 times the amount, after the financial crisis in 2008. So you've got the mainstream citizens, flooding to buy silver coins.
Absolutely. I mean, what we saw for years was, once the Silver Eagle, actually it's called the Silver Liberty program, started in 1986, you could bet for years that the most sales were about 10 million ounces per year, and that held for a decade or more. Mm-hmm. And then once the crisis started in 2008, it doubled rather quickly to 20 million ounces, and then it doubled again to 40 million ounces. Right. So that shows you that the public isn't as asleep as most of others may think. They're certainly taking silver at a much more serious rate of accumulation than they had prior to the 2008 crisis.
And it's interesting to note that, on eBay, the premiums for silver maples and silver eagles, and you can consider eBay that's now grown to be a pretty diverse market. It's as good as an exchange, but it's kind of the people's exchange. But the premiums are in the 30% range already.
Yeah. Yeah, we saw that during the crisis as well. So,
that's right.
Yeah, I think it's possible, that this time it's going to be very difficult to get physical bullion in size. I think there'll always be the coin dealer market out there that can buy some rare coin or maybe a bar or two or that type of thing. Right. But I think for, BMG to secure, millions of ounces of either metal or Sprott or, any of these other holding companies that I know and trust, to be able to secure it with a phone call, I don't think that's going to happen.
Well, this is where we're leading up to, we're dealing with one very large financial company, and they've recently bought a U.S.-based wealth manager. Now, for this wealth management company, the minimum client size is 20 million, so it's all high net worth. And they have 220 billion under management. No gold.
Wow, that's
now, this is a company that I never heard of. You probably never heard of, but 220 billion. There's so what happens when they decide? Well, maybe 10% is what our client's going to need. Becomes a tough job to fulfill it, and whenever I've talked to people, that are going to need size, I say, you need to start buying today and start buying every day. So you don't drive the price up and get some kind of decent accumulation, because the time will come where it'll be very difficult to do, period.
And I'd just like to circle back and reiterate what I said earlier, which is that the amount of gold held on paper is double what it was a year ago, and it's strong hands. All these orchestrated sell-offs, these people aren't selling. So this is my take, so I'm going to emphasize that, but it suggests that whoever owns that paper gold doesn't want to give it up, regardless of what the selling pressure may be. And that may be the only title that they have. I'm not saying that, but it could be. I want you to think about it. I'm not talking to you, Nick. I'm talking to the audience. Think about why would someone that owns a futures contract not want to sell it for other paper? That's what they usually do. What's changed? Why are they holding on so dearly to that piece of paper that only generates other pieces of paper?
Yeah. No, exactly. And this is where this paper tsunami is going to end badly. There's no other, option but ending badly. I mean, the debt is totally unsustainable at every level, whether it's government, corporate, personal, globally. We're in a sea of debt that can never be repaid. And this is where you get like the book or the big reset, where that at some point in time you get a reset and you're going to wake up Monday morning and the price of gold is like $3,000 higher in one shot, that kind of thing. Yeah, I don't think it's going to be a stair-step increase like we had from 2002 to 2011. So, the other thing that you might address is there's been a number of articles on the fact that we're almost at or maybe have surpassed peak silver already. So we're in a situation where demand is increasing, supply is in a deficit from what I understand, and the most of the silver is byproduct, so you can't just ramp it up. If the price of silver goes 200, you're not going to dig up more copper just to get a few ounces of silver. So that seems to be a looming problem coming along at the same time you've got increasing demand.
I address it in the book, and we devote some pages to it in the Silver Manifesto. It's complicated, as you pointed out, because what's uneconomic silver at $20 an ounce becomes economic at $100 an ounce. But because, as you stated, with 70-75% of the silver market being a result of copper, lead, zinc, and 13% of the silver supply comes as a result of gold mining.
Right.
So you've only got maybe 25% that's what we consider pure silver, and all the pure silver mines are base metal mines that primarily mine silver on a cash basis.
Right.
So you're right, but that makes it difficult to analyze peak silver or not. I'll just give you the bottom line, Nick. We think that peak silver is probably at 2017 or 2018. Am I right? I don't know. I'm certainly well known for my quality of work, but that doesn't make it right. And we point that out in the book. It's too many dynamics. I think the main point to take away is that even if we're not at peak silver right now, the commodity sector, generally speaking, I'm not that favorable to anymore. The drivers that took place in 2000 onward was driven largely by China. They were going through what I consider to be a second industrial revolution, and that took all the commodities higher. I mean, look at how much concrete or cement was used in China over the last year compared to what was used in the States. I mean, it's a factor of 10 or 100-fold, I forget, but just massive.
They've used more cement in 1 year than was used in all the history of the United States.
Something like that, yeah. It's just phenomenal. And that's over. I mean, not that China won't grow, but they're not going to grow at the same rate.
Right.
And so this commodities boom, I'm fairly negative on all the base metals with the exception of zinc, and I'm not even that real favorable to zinc. And I think this is what I stated early in the year, that the top tier of all the commodities, because they're really not commodities, are gold and silver, they're money. And you could make the argument silver's both, and I will admit that. Certainly its industrial uses are manifold. But the run to gold will be there because there's probably a contraction in everything else. And people say, well, gold can't do well, it only does well in inflation. No, gold is a crisis hedge. Gold was proven to do better in a deflation and inflation by Professor Roy Jastram.
That's right.
So I just like to look at it as a crisis hedge. It's a confidence thing. I think that's the best word, trust or confidence. Because if you don't trust what the bond market's going to do, you don't trust what the currency's going to do, you don't trust what your insurance plan is, you don't trust what that second mortgage that you're holding for income is going to do. You want to go to something that you can trust. And believe it or not, I'm sorry, I have to laugh at my own joke. You know this, but a lot of people don't. They're going to trust something that people have trusted for 5,000 years.
That's right. And they're going to learn why they trusted it for 5,000 years.
Exactly.
In many cases, painfully. So but hopefully with enough education, people will start understanding it and be able to act before it's too late. That's the hope.
What is, I'm a realist. I think that, if you have 1% of the population that's invested in physical metal now, and if you double that to 2% of the population, you've doubled the demand on gold.
Trend.
And where does that leave the other 98%? My fear is that it will be a small percentage that are basically saved financially, and there's other things to consider besides financial health, because there'll be so many distortions in the market due to transportation, communication, war, jealousy, cyber attacks. I mean, I think the repercussions could be many faceted due to the mathematical inevitability that this debt market cannot be sustained.
Yeah, I thoroughly agree with that, and that's where, and I think gold and silver certainly doesn't solve everything, but it puts you in a better position than if you don't have it, kind of thing. So that's important. The other thing I've always thought that in silver, it's sort of supply and demand inelastic, and that the supply is inelastic because of the 80% byproduct. So price goes up, you can't really affect supply, which normally what happens, the price of copper goes up, you dig up more copper.
Buy more copper, sure.
But in the silver, you don't have a big effect. And the other thing is that you don't have an effect on demand except maybe jewelry. So if the price goes up, jewelry demand could be negatively impacted. But most of the industrial demand is high-tech electronics, which are growing and growing and growing. And there's no substitute for silver. So if you don't have the silver, you don't make the product. End of story. And the percentage of the cost of silver to the end price of the product is insignificant. So you're not going to care whether the price of silver is 20 bucks or 200 with respect to the effect on the price of the iPhone.
Exactly right.
And without it, you don't make iPhones.
And I understand it. I don't know if the audience does, but I mean, there's just so little silver. using an iPhone that if it costs $20 or $200, it doesn't matter because it's not going to affect the price of the iPhone because it's such a small amount. But it has to be silver.
That's right.
Because if it's copper or any other element, it does not function to the reliability that silver possesses.
Well, I think it can be gold, but then it's 10 times the price.
That could affect the price of the end product, perhaps.
So that's always an interesting factor. Anyways, I think that's, you know, we've had a good chat. For audience generally, we're launching a third fund to the BMG family of funds. It's a silver fund. We've already have the approvals and everything from the securities commissions, and it should be live, able to place orders on the 17th of October. And maybe for the audience, you'd tell them where they can go to your site and see some of the information you do.
Sure. It's easy, just go to themorganreport.com and get on our free email list. I'll send you the Riches and Resources Report, which includes 2 free movies. One is on the decline of the Age of Empire. It talks about the macro cycle and how this has happened again and again throughout history. And then there's a second movie called The Empty ATM, which is a documentary about the currency crisis that took place in Argentina in 2000 and 2001. Basically, it was a bail-in. What took place was that the citizenry could not get their money out of the bank except for a very small amount on a weekly basis. And so their funds were held within the bank, and then a devaluation took place. So when they were able to retrieve their funds, they had a great devaluation of their currency. So something to bear in mind, what's actually taking place. People ask me all the time, what's going to happen? What's it going to look like? And the answer is, I don't know with any certainty. I have certainly an opinion like everyone. But if you watch this documentary, you're going to see what the country of Argentina went through on an actual devaluation. And it's fairly recent.
Terrific. Thank you, David. It's been a pleasure.
My pleasure's all mine. Thank you.